Good morning, everybody. Welcome into another pre-market rundown here with the Everyday Growth Advisors. I hope you're having a good morning, evening, wherever you are. Thank you for taking your time out to stream and tune into this pre-market live. It's been a pretty eventful week so far. Our forecast for the week has played out pretty nicely. As you guys remember, on Monday, we pretty much called out for this little drop. And then now we are looking for signs where we are bouncing at exactly the level which we predicted around the 35.50 or 35.40 mark. And after this, we are now obviously waiting for a squeeze for market makers to pressure this market into the upside ahead of the next couple of days. So let's go through the macro. What are we expecting in the next couple of days and the playbook for how we should be playing this. On top of that, I have a little bit of a tidbit in terms of Tesla. Lots of bearish flow on that one for the past 2 days. So we'll go through all the possibilities going into this session and beyond into Friday, where we'll meet again ahead of the job numbers. But the job numbers will already be out when we have that live stream, so we will be able to this will pretty much be a very important live stream until Friday's unemployment numbers, which are really going to move the markets. Okay. On top of that, we have Powell that's going to speak today at 1:30 Eastern time. And so you got to obviously remember that whenever Powell speaks, that's going to be something that also possibly moves the market. If he says something hawkish, then, that's likely to send the market a little further down in jitters. And then if we get a bounce, or if he says something remotely bullish, he could literally say something like, yeah, the Fed likes the data that we're seeing right now, and that would send the market really rallying up into the upside. So there's a lot that can go wrong or right in this next couple of days. So let's break it down together. And remember, if you want to go far, go together. If you want to go short, then go alone. Trading is a very lonely journey, so just tuning into the live stream should really help you out and give you some direction. Especially, we share a lot of gems on this stream. So share it with your friends, share it with your family, whoever you think will benefit. And remember, as always, make sure you hit that subscribe and like button. Smash it so that we can get this on the road. Okay, so from the macro perspective, really not much has really, diversely or conversely changed. GDP numbers did come in today, and the consensus was 2.7%. The actual was actually 2.9%, which means the economy is doing a little better than expected in terms of the trade balance, import, exports, etc. So pretty much the market obviously didn't really react to that news. because GDP is obviously a lagging indicator, so it's not really a forward-looking tool for markets to kind of forecast anything to do with rate hikes or sensitive information to do with the future 6 to 8 months. Now, having said that, what Powell may say today during his speech may move the markets. More importantly, as I have mentioned, I think about 15 million times now, the more important thing that the Fed is going to be focusing on is the unemployment rate on Friday, right? And that's really going to drive, or rather going to be a good indication of whether the Fed's moves on, hiking interest rates have been working. We want to see the unemployment rate somewhere in the above 3.7 level, 3.7%, okay? So the consensus right now is 3.7%, I believe, as the unemployment rate. That's the consensus. We want to see more than 3.7%. This is the bullish outcome. Now, you might be thinking to yourself, what? How is that even possible? Why does more unemployment mean it's better for the market? Well, because you need to understand something. The market is a very unique piece of a unique pricing mechanism for equities. Okay, when we look at unemployment rising, that actually means that inflation has gone down. Okay, right now what is happening is there are a lot of people that have gone out of labor market. Okay, and the labor workforce participation is very, very tight. So we have a very tight labor market where the labor conditions are very how would I explain? It's just a labor market where there's a lot of jobs and then a lot of people seeking jobs as well. So that's not very good, because what happens is this causes a lot of friction in the labor markets, okay? And friction is not a good thing. Why is friction not a good thing? Because what friction does is it causes a lot of people from different groups, let's say people from tech or people from, let's say construction, they're displaced into different sectors and they don't know where to go. So that takes a while for it to write itself out, right? The natural laws of supply and demand in the labor market has to kind of figure itself out. Now, when that happens, during that time, there is going to be a mismatch of jobs and companies are going to spend more to recruit more people, okay? So when unemployment rate is low, that means that there is a more increased labor force participation. Where unemployment is high, then that means that the consumer is less likely to feel the burden or the effects of the cost being passed on from the business. Okay, so if that was too complicated for you to understand, just remember more than 3.7% this Friday is gonna. We want to see 3.8 or more, right? Closer to 4% is better for us, because that will lower the likelihood of the Fed hiking rates aggressively into next year. Remember that we already know what the next rate hike is going to likely be. It's likely going to be a 50 basis point rate hike, and a 75 basis point rate hike would be a shock, right? So a lot of these things are already priced in. What we are looking for is forward guidance into next year and how the dot plot for each of the Fed chairs are going to change according to how the job numbers come out, how inflation numbers come out. And one of the first signs of inflation cooling is going to be a higher unemployment rate. All right. So that's one of the important things that you need to keep at the back of your head as you're trading towards Friday. So now what does this also mean? So we have to look at how the price action is actually going to work, right? What is the forecast likely to be like? Now, courtesy of also one of my dear friends, Andrew, who we've been talking back and forth about, he gives me some significant insight on market dealer levels. We go back and forth collaborating on ideas because obviously, as I've said, this space is very heavily dominated by people who are very afraid to share information. It's almost like people think that, by sharing information, they lose out or something like that. And I'm all against that idea, because I think that the more you share ideas, the better it is for everybody. And it allows people to ask better questions. You become a better person. And the more knowledge that you share with people, it just makes people better. And that creates a better environment. You want to be around people who are like-minded and of the same caliber. You don't want to be constantly throwing people bones and hoping that they're going to be reliant on you forever. That's not the right way to do things, right? So as going back and forth, we also looked at the exposure of market dealers, into these next couple of days, into the next weeks. And we do see some significant exposure to the downside, but we do see that somewhere in the mid of December, right? And that's a little ways out. It's not really immediate. In the short term, we've had pretty much a lot of exposure that's been pressured to the downside. But at the same time, this warrants a squeeze to the upside in the short term. So The likely scenario that we're looking at is a possible situation where we have already come down to the 39.40 for a retest. Maybe a squeeze to the upside, like how we've been seeing in this market, maybe on the books. Okay, now obviously we're not saying this with certainty, or there's like 100% chance that this happens or anything like that. It's, remember, we play this game in terms of probability. Probability is the name of the game. What is the likelihood of a scenario happening? That is the name of the game, right? So if we look at the exposure of market dealers on the table, it's very likely for a scenario where we get a squeeze to the upside ahead of Powell, right? And then maybe if Powell says something, it might also cause that squeeze to the upside. It could be either or, right? Either a squeeze to the upside before Powell or after Powell. And that would set us up nicely into the unemployment numbers on Friday before that sell-off happens. So we're looking for a quick little... liquidity is already being engineered here, right? Remember that. So we want to see that squeeze to the upside to trap... Essentially, now we've trapped some bears. We want to trap some bulls and then make the final move down after unemployment numbers come out on Friday, which in my opinion is not going to be a good look because the labor market has been pretty tight. Okay, so that's just the forecast. That's how I see things playing out. Rally first, then a sell-off. And if you're playing into that playbook, then obviously there's many ways you can take advantage of it. All right. So putting the macro together with the technicals, that's what we have here. That's exactly the forecast that we put out in the newsletter. And then also on the live streams on Monday and today, I'm reiterating the same view. We got that pullback already now. Now we're waiting for that bounce. Want to see that squeeze to the upside. Once we get that squeeze to the upside, we can actually start preparing for that position on Friday. Of course, you don't really want to take any bets on Thursday because the unemployment numbers come out pre-market, 8:30 on Friday. So don't go crazy betting any upside or downside. My advice to you is stay out for the unemployment numbers and just play the market move after it comes out rather than playing the move before. Okay. Now, situation on NASDAQ is a little different as usual, right? Tech is still struggling here. And it's not just tech, but also the disruptors, right? We saw that breakdown from the key pivot yesterday, but then we were not really able to hold below that breakdown. But just this AM and through the Asian session, we are seeing some rejections on that level at the dual zone. So this might cause NASDAQ to be a little weaker. Now, if that causes NASDAQ to be weaker and we don't get the squeeze that we are expecting, then that blows our entire theory out of the water. That setup that we are looking at for the rally and then the sell-off might get reversed, where we get the sell-off first, then the rally. So you've got to be fluid and be able to see both sides of how the situation may play out. On top of that, we have small mid caps, which is the IWM, kind of plunging back down. I managed to close my IWM puts that I had yesterday, which were expiring Friday, at considerably less of a loss. So I only took a $8,000 loss on it. This week, so far, I am at $33,000 for the week, which was not a bad week. We had a really good trade on BABA, and I have some BABA runners, as well as BABA $88 calls as well. So all in all, not a bad week at all. We're looking to close out the week strong. Not to mention the VIX is also hovering above the 2129 level, which is the key level for us to stay out of the woods. This is the considered the less bearish levels, and then anything above this starts to be increased volatility. So a bounce here may see the VIX try and clinch back to 24, 25 levels, but we'll keep watching the VIX. Remember, it is the S&P 500 futures that we'll be watching for confluence with the VIX. Bond market has also crept up a little bit. And remember, we still hold the thesis of H1 or the first half of 2023 being favorable for bonds over equity, and then equity only recovering in the second half after the recession has landed. Okay, so that's something that we are still watching the bond markets for, and then the dollar index as well, moving sideways in the range right now between the 108 level and the 105.30 level. Or 105 pretty much, right? So that's the macro or the background market. Looking at individual sectors, energy still kind of hovering in this top zone. This is one of the reasons why I think a couple weeks ago somebody asked me, hey, should we short energy? And the time is not, we can't short energy just yet, right? We don't have significant developments on OPEC news yet, even though they already did say that they're going to be cutting supply. That we'll have to look for better markers, and also the trade imbalance for energy in the next couple of weeks to actually figure out where energy is going to be moving. Okay. Apart from that, other sectors like healthcare have been kind of bullish, but having pullbacks. You have consumer staples that broke out of its downtrend, but still hasn't really proved that they're indeed breaking out strongly. And even consumer discretionary has been in a kind of a pennant formation here. So we're waiting for a lot of these, to still be confirmed. They're really kind of just in awkward formations right now that need either pullbacks or corrective waves. If you've been watching the live stream since Monday, Enphase Energy played out beautifully. I managed to close that one out as well for a slight profit yesterday. I want to take this one once it starts to kind of climb back to 307 or even 310 for a rejection, and then play the next wave down back into the 300 level or the 290 level, which will be the next level at which Enphase should come down to. So we're looking for a wave up, and then after that rejection, back down here. So that would align with our theory on SPX/NASDAQ. Okay. Also, we've been seeing really bearish flow on both NVIDIA and Tesla. And now with Tesla, they've been betting on pretty much 170, 170 to 50. These strikes for the gap fill, they've been betting very aggressively on them. We're looking at these flows that are expiring literally within this week and next week. They're betting very short term. Obviously, there was also some flow for the 16th of December, so mid-December, which would align with a lot of the bearish flow that we've been seeing on the indices as well. So one of the things that caught my eye yesterday was Tesla flow, which was super bearish, and it was repeat flow, so traders are building a position. That might be one of the trades that we'll be looking at to play, capitalize on any volatility. Tesla moving back up to 183, 184 would be a good range for us to get short again if we can get up there and reject once again. If not, we see a rejection at around 182. That's also a good entry point. You're not going to be able to really time it perfectly or get the right entry because of this zone is pretty wide. So I would say play it cautiously and buy enough time. You really want to buy enough time, and I would go, at least 2 weeks out rather than taking weekly expiries. I know it's expensive, but then paying for that additional premium is going to be worth it. Okay. With NVIDIA, they were playing this bottom half of the range at 151, 152, this range right here. So not a huge move on NVIDIA expected based on the options flow, but they were pretty much betting on that 150-250 strike and 151 or 150 level here to retest this bottom part right here. So with this rejection here, it is very possible that NVIDIA comes down to retest this bottom level here and then start forming this wedge pattern that we've been kind of looking at for it to squeeze and then kind of move up here to form that wedge. So that's something that I'm looking at on NVIDIA. Obviously, you don't want to go and take some 139, 140 puts because those are unlikely to hit. So if you're a small account and you're thinking, oh, I want to go out the money on this so I can capitalize on that move, remember the move you're only expecting is literally $3. So by taking a 140 call, you're not going to get enough gamma expansion on those contracts to really make that play worthwhile. So if you're going to play NVIDIA, make sure it's a delta driven trade rather than a gamma driven trade. Okay. Yeah, so that's all I have for you guys this morning. Any questions, any tickers you guys want me to break down, put them in the comments right now. As usual, let me know if you guys find these live streams helpful, and I love to hear back from you guys. So let me know what you guys think and also your thoughts on the market. I always love this sessions to be a back and forth rather than me just talking. So I love it when you guys do chat with me. Good morning. What's up, Shawin? Brenda, Anil, M, and Churi. How are you guys doing? Now, along with that, we have Apple that sold off pretty aggressively yesterday. This was also significant development after news came out that Congress was possibly going to look into Apple, and then because of its monopolistic competition, and then also there was some news that came out about the iPhone factory, etc., etc. So Apple has been seeing a couple of days of very bearish price action, but if the market does move to the upside, then it's gonna squeeze Apple with it, or rather, Apple will lead that squeeze. So don't. My recommendation is there is a huge gap here down to 135. I wouldn't play the gap, not until unless you get that clear break below 140 with volume and momentum. You don't want to chase this to the downside. Don't FOMO into Apple to the downside. The risk to reward ratio here is better to the upside than it is to the downside, since this level is actually a key level of support. It has been a key level of support where a lot of demand has come in. Okay, so be very careful with how you're dealing with Apple. A lot of people, beginner traders, would go for this and they would take bearish positions here. So be careful. That's all I'm going to say. Definitely helpful with your analysis and sharing. Hey, thanks, man. I appreciate that. Thanks for the kind words. Really do appreciate that. Baba here, nice. Up to 82.50 this morning. We're looking to play Baba up into around $85. We'll see if we get that. 85 is the supply zone up here. We do have some calls already, so we'll see if we can get there. All right, I don't see any questions or any comments or any ticker breakdown requests. So maybe I'll just end the live stream here, keep it short and sweet. I do appreciate you guys taking the time out to share and also smash the like button and subscribe as well. So appreciate that very much. Have a great rest of your trading day. I'm going to jump on the Discord trade live with the team right now. And I'll see you guys back on Friday. So we know the game plan. I've briefed you guys. If you forgot what it was, you can watch this live stream again. And you just fast forward the first 5 to 6 minutes, and I'll be going through everything again. So the stream will be available right after it ends. You can refresh it and jump on if you missed, and you'll get the full breakdown. Okay. Have a good one, guys, and peace out, guys. Take care, and I'll see you back on Friday for another pre-market session. Peace.